Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Wednesday, August 10th. The stock market roller coaster is likely to continue today. We're looking at a lower open on Wall Street after the Dow Industrials posted their biggest gain since March of 2009 yesterday. And that rally followed the largest stock sell-off in years, prompted by Standard & Poor's downgrade of U.S. government debt on Friday. Investors continue to digest the Federal Reserve's announcement that it will hold interest rates at ultra-low levels at least through mid-2013. It was the first time ever that the central bank put a time frame on their duration, and the move drew strong dissent. 3 Fed governors objected to the specific time reference, instead of the old language of holding rates low for, quote, an extended period of time. Policymakers also said that downside risks to the economic outlook have increased, and they now expect a much slower pace of recovery than they did at their last meeting in June. In addition, the Fed predicted that the unemployment rate will decline only gradually from its current level of 9.1%.
The markets reacted positively to the statement, focusing on the promise of low interest rates for the foreseeable future. In particular, the move is giving a boost to gold because a low interest rate environment increases gold's appeal. The higher interest rates are, the more it costs to hold the precious metal. Right now, gold is rising close to $1,770 an ounce, after closing at a record of $1,743 yesterday. Oil prices are also back on the rise, after falling below $80 a barrel yesterday, their lowest price since late September. As of yesterday's close, crude had fallen 17% this month, as investors worried that slowing economic growth would cut into global demand. But today, it's jumping by more than $3 to back above $82 a barrel. Meanwhile, the dollar is holding steady against most major currencies, but it's rising against the British pound after the Bank of England said near-term UK growth prospects are weaker than expected. And the Swiss franc is also backing down from a recent record against the dollar, after that country's central bank said it will take additional measures to curb the massive overvaluation of its currency, which is posing a threat to its economy.
Among the biggest stock winners during yesterday's rally were the financials, and they'll be back in focus today. Capital One Financial is buying the U.S. credit card business of HSBC Holdings for a premium of about $2.6 billion. The deal will make Capital One the third largest issuer of private label credit cards, including cards for General Motors, Saks, and Best Buy, among others. Overall, Capital One will be assuming about $30 billion of HSBC's credit card loans. Shares of Capital One are jumping 4% on the news. Separately, Bank of America is selling part of its home loan portfolio to Fannie Mae for a reported price of more than $500 million. Bank of America is trying to shed assets and reduce its exposure to mortgages. Bank of America's stock is down 43% this year amid concerns about its exposure to mortgage-related losses and lawsuits.
We also have a couple big earnings reports to tell you about. After yesterday's closing bell, Walt Disney reported an 11% increase in its fiscal third quarter profit. The numbers were helped by strong revenues at its ESPN television network and Disney's theme parks. However, the report seems to be disappointing investors. Disney shares are down 3% in the pre-market. But Macy's is set to open nearly 5% higher, after its profit and sales rose more than expected in the latest quarter. Macy's also rose its earnings forecast for the full year. After today's closing bell, we'll get quarterly results from Cisco Systems and News Corp. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.